Welcome back. Well, steady as she goes for the Nifty, so 10,655 above the 100-day moving average for today. Mid-cap index also not doing too badly, so up around 0.5%. Given up all of the gains from the day's high, but nonetheless still steady. And remember that it's the 8-day losing streak, if in case we do close in the green, that the Nifty will be breaking. If in case that is, a close in the green. So let's see whether the momentum sustains for the next 1.5 hours or thereabout. But let's get in another query then. We have Mr. Arthur T, who writes to us from Mumbai. He holds 18,000 shares of TBZ at 85 rupees since the past 2 years, long-term investor, and wants to know whether to hold or sell. Well, a lot of pain in this particular purchase. Vijay, would you have a view on TBZ and this particular purchase, a huge loss which Mr. Arthur T is sitting on? What would you recommend? Book out or maybe wait on?
Well, what I can see is that he has a large quantity, 18,000 shares, and this is painful, when you take large quantities of a particular share. And I would recommend it to the investors, if at all they are getting into large quantities. First of all, they should not, because they should never try to keep all the eggs in the same basket. Number two, if they are buying, there should be strict stop losses on any stock. It might be a TCS or a Reliance, but the stop loss is imperative. Secondly, I think that this stock would take time to come back. I think that in all the jewelry companies, if you look at the structure, I don't think that they are ready to break out as of now. The only jewelry company I like is Titan, and it has also shown a huge promise. But long-term investors can still buy in a dip. I think that Titan has the capacity and capability of doubling up, because apart from jewelry, they are into a lot of other stuff as well. So I would recommend an exit on rallies in Tribhuvan Das, because the chances of destruction are very high. Meanwhile, he should have a stop loss of 50 and hold for a rally, and if at all he gets anything around 60, 62, we should try and get out.
All right, up next, Mr. Sachin Kulkarni is on the line with us from Mumbai. Hi, Mr. Kulkarni, good afternoon. How can we help you?
Yeah, good afternoon, madam. I'm having Coal India shares, quantity 310. I'm holding these shares for last 6 years. And purchase price was, average purchase price was around 320 rupees.
Okay.
Now, I believe this share has come down to 215, 220 level. So what should be done? Should I hold it for another 2 or 3 years, or what may be the recommendation?
Ouch. Rajat, Coal India bought at 300 plus. He's already stayed on for 6 years. Should he stay on further?
If you ask me, I would say a big no. Exit on rallies or exit at current levels is the best choice, because I really don't remember whether it forms, it is one of the constituents of that Bharat 22. But if you have seen the statistics that for EPFO, Axis Bank and State Bank generated returns of 12% or 10%, and that investment in Bharat 22 earlier has generated 0.48% annual CAGR. That kind of a thing for PSU stocks, and especially this stock, is a capital destroyer. So my suggestion is exit on rallies. There is no other option. Very, very sorry. No technical parameter is suggesting that there is a likelihood of a bounce back and a sustainable bounce back at that. So exit.
Okay, Vijay, would you share the same view on Coal India?
Yes, Coal India, generally people used to buy for a dividend, and I think that it was a good dividend yielding stock. But what I'm hearing this year, that there's going to be a buyback, so there would be some iteration, although I'm not sure about it. But yes, I completely second what Rajat sir is saying, that I don't think that there's much action. If at all he gets somewhere around 230, 240, that would be a good price to exit. But yes, I don't think that Coal India is a company to be invested in with a longer term perspective, because I don't think even this year you're going to have a dividend.
Okay, all right. So that's on Coal India. Well, that stock has underperformed significantly in the past 1 year odd. But let's get in another query now. We have Mr. Sanjay who writes to us from Mumbai. He holds 35 shares of Bosch at 22,200. And this is since the past 3 years, long-term investor, and wants to know what to do, hold or sell. So sitting on a loss for that one. Also, a lot of queries where people are, sitting on massive losses. Gives you a sense in terms of what exactly is also happening with the mid-cap index. But Vijay, what would you recommend in this case for Bosch?
Well, it is equally painful for us to recommend because, we've seen a carnage in the entire small cap and the mid cap space. And of course, we have also seen a carnage in the entire auto space. So if the larger ones, the biggies, are not able to, look up the likes of Maruti, Hero, Honda, and Bajaj Auto, haven't performed well that, in the last 1 year or so. The ancillary companies are going to struggle as well. So Bosch, although a great company, it's a multinational, it's a zero debt company, but again, if the sales don't happen on the ground, the ancillary business is going to definitely struggle, and that is one reason why we are seeing this damage in Bosch. But again, I would recommend a hold with a stop loss of 17,500. This gentleman should hold on to the stock, and if at all we see some kind of revival, some kind of a rate cut happening that lifts up the entire auto cycle, or there is some other good news, so that would propel the ancillary space as well. But yes, there should be strict stop losses in such volatile markets.
All right, gentlemen, thanks very much for joining in. We need to wrap up on your stocks with the news that the market is again off of the high. So now just holding with a gain of about 0.5% on the frontline indices. Some of these oil marketing companies are coming off, HDFC, L&T as well, now shedding some weight. But thanks very much for watching. Closing bell comes up next.